Welcome to TheoTrade. This is Don Kaufman. It's June 13th, 2016. Tonight, we are going to take a look at what can only be described as volatility exploding to the upside in today's trading session. It's been on the upswing. I pointed this out in our weekend update. However, today it is it's a very serious event. If you look at the volatility futures, they happen to be up some 12% again today. But taking a look back since the beginning of the year, what does the market see that's going on right now? Well, it's larger than any other single event that we have seen in years. That is, okay, any way you want to put this, volatility is exploding to the upside. What does that, again, amount to can really only be one thing, all right? Markets are saying they are getting and preparing ready for a major event. That's it. The only way that can really be read into, traders are bidding up volatility, and again, I've only seen this happen a handful of times in my trading career, but taking a look at the volatility futures, you got to recognize the vol futures back here. This was in the middle of the S&P's tanking down to the 1800 level. In no way, shape, or form am I saying, oh, the S&Ps are going down to 1800. What I can tell you is, you look at something like the British exit vote. Please, we've known about that vote for a long time. We've also known that some of the odds of, Britain exiting is growing. That can't describe volatility futures moving from 17 to 20 in 2 trading days. Now, I want to step back from that. At the same time that volatility is exploding over here, and very few people ever read into this, there's something we need to look into in the volatility skew. And that is, we're actually going to look at the volatility futures. Now, there's 2-day volatility futures. They're trading at 20.65 right now. Go a little bit further out in time. The vol futures that I'm talking about are the 37-day volatility futures. So they've exploded now up to 2078. And again, my mouse is right on it over here, 2078. Yeah, we still have, almost 25 minutes to go in the trading day. They're doing it on 166,000 contracts of trade. Now, one thing that you have to be aware of, okay, and why I'm saying this has nothing to do per se with the British exit vote. This does not happen often, okay? We're in it right now. Volatility typically in the short duration, for instance, here's 37 days. We go a little bit further out in time. We go to 65 days. You go even further out in time. You go about 100 days. Volatility normally looks like this. The 37-day window, okay, might be trading at something like 18. The 65-day window over here might be trading at something like 20. 100, this one might be trading at about 21. And that's very normal in terms of volatility skew. And what that means is the future, which is, for instance, 100 days out, that future holds more risk than the present being 37 days. Okay, what are we seeing right now? Blank the screen, start over again. When I say volatility, it's imminent. It's right now. You're seeing the 37-day, vol futures. Listen, they're on your screen right now. They're trading for 2082. Okay, so they're trading for 2082. Then we come to the 65-day vol futures. Well, they're trading roughly at the same thing. They're trading for 2090. What happened? That the vol futures are flat. That's saying the risk in the present is as large as the risk in the future? That does not make sense, given the fact that the S&P's only down 15 points today. What does it tell me? We haven't felt the brunt of whatever is coming. Somebody is buying volatility. And when I say somebody, I don't mean like one firm. These firms are buying volatility in mass right now. Get yourself prepared. Okay? It is on. Last but not least, look at the VVIX. Now, if you missed this weekend's video, I was talking about the VVIX, and I'm just going to open this up to broaden our horizons. Yeah, hey, you don't have to be a charting expert to realize the thing went from 80 to 120. Roughly speaking, it went from like 90 to 120 in 2 trading days. What the VVIX is, it's the volatility of the volatility index. It says how fast and how intense okay, is the bid, okay, or offer that is, for what? Volatility options. Okay, so what the VVIX is really measuring happens to be none other than the VIX options. It's measuring the VIX options, all right, and it's actually measuring their volatility. So the volatility of the volatility index, think about that one, it's kind of fun, is absolutely exploding. And it's doing it on almost 2.5 times normal volume. The volatility, okay, contract today, the options, they traded 1 million contracts. It's 2.5 times the norm. It already trades normally like, 400,000 contracts a big day. This, it's trading over 1 million contracts. Who the heck is buying it? Apparently everybody. Yeah, the number of calls, okay, are fairly extensive versus the puts, but that's normal. Again, it is on right now. Now, as I go back over here and I take a look at the VVIX, and this is something worth noting, okay? And I was talking a little bit about this over the weekend session, but I'm going to go to style, and I'm going to go, all right, to like a 10-year. In this case, let's just do a 10-year daily. The VVIX hasn't even been tracked that long, okay? It goes back into the time frame of about 2012. Take a look since the inception of the volatility index. You only see a handful of places where volatility happens to move this fast and this furious. Every one of those events, okay, was a major event. You got to go back into, again, August of like 2015 to see movement like this. Once again, this is in December, all right, of 2015, right before markets absolutely tanked. You can go back into 2000 and again, 13, 2012 to see action like this in the VVIX. Moreover, take a look at the number of times since 2012 that we've ever even been at this level of volatility of the volatility index. Okay? Ask yourself why. There can only be one simple answer. Volatility is exploding. The markets are preparing for a major event. It doesn't necessarily mean that we're going to tank. It means that trade right now is undoubtedly pricing that in. Okay? They're buying it. Okay, advanced decline line today, nothing unusual. The volume inside of the S&P futures is fairly heavy. Okay, I don't see anything that really stands out in any individual stock. What does stand out? Undoubtedly, though, why volatility is exploding. Last but definitely not least, for those of you that do look at the VIX, again, the VIX itself is also on a tear, and this is coming back 10 years. Not too many times in recent history that we've seen the VIX make this drastic of a move this quickly, but it really isn't the VIX that grabs my attention, because the VIX isn't even a tradable instrument. It's the volatility of the VIX, which is really measuring trade, and that is people are coming in and they are buying options in the VIX like they're going out of style. They are buying volatility futures like they're going out of style. Think about it. You better know what your risk is right here, right now. An event is unfolding. We do not know what it is. Clearly, derivatives firms are ahead of it. Okay, they feel the risk. This is not an event that's coming necessarily in just the next couple of hours or few days over here. This looks like we're pricing in a major and much more drastic event. I say that, okay, because you look at the VXST, which is 9-day volatility, it's up 43% today. That's the next 9 days. But then you look to the back month, the VXV, that's 90-day volatility. That thing doesn't move. Who knows what's going to happen 90 days from now? Tell you what, somebody's buying it. They're buying back month volatility. They're buying front month volatility. Any way you want to look at it, market's preparing for an event. Stay tuned. Much more to come here at TheoTrade. Again, know what your risk is. You've been warned. After tonight, okay, it's all hands on deck. Thanks, everybody, again. Bye-bye.